Hello again, everyone. Thank you for joining us on this live stream Sunday night in the West, Monday morning here in Asia. Again, thanks for being here. Uh, Quick roll call, Faith Parent. How are you doing? I'm not too sure about this one. Well, we'll see. I'm basically just going to go over four charts and then one with an overlay, and we'll go ahead and discuss it because these things they do tell a story, and of course we like to know what that story is, and hopefully to be to use and make the best decisions we can going forward. So again, we'll see how it goes. Carrie Ellen Wilder, how you doing? Wayne Archer, how you doing, sir? Harold B, hello from Canada. Wayne, how you doing, Canada? A lot of things going on in Canada here. Toronto housing market's having a bit of a tough time there. Um, Always feel free to chime in. Welcome aboard, Wayne. John Bethea, how you doing? Throttle. Uh, Inconsistencies. Well, they've been pretty consistent, but the thing, it's really telling us more of a story that I think we should really discuss and understand. So hopefully we can get through this together. Truth Monster, yes, saddle up, silver up. We're going to get going in about 30 seconds or so. Pablo Pina, aloha, Seymour Rivers. Seymour, thank you. Sound check, always appreciate that. Harold, appreciate that as well. Rod, how you doing? James Sewell, another one from Canada. How you guys doing up there in Canada? Bill Wood, Tampa, Ernest Blackmore, how you doing? 495. Doug Wilder, California, how are things going there? And Throttle, yeah, reality for sure. So I'll be with you guys in about 10 seconds or so. And let me just get a sip of water. Thanks again for being here. Okay, hello again, everyone. Thank you for joining me for another edition of Silver Bullion Television, SBTV. Glad you all could be here and come on board again. See a lot of new faces, so thank you for being here. Appreciate the time you're giving us. It makes a difference for everyone. Sebastian, how you doing? Canada as well. Wow, a lot of Canadians in the house. Brisbane, Australia. Matt LaRoche. Let's see what else is out there. Wayne, Maryland, how you doing? Super Coke, Greg Gala, and Wen Low from Jersey. Thank you all for being here. As always, you can find us on social media. Let me go back there. Silverbullion.com is our website, or .com.sg, excuse me. Silverbullion.com.sg is our website. We do sell gold and silver, platinum, palladium, things like that. And we also vault these items as well. And we do specialize in systemic wealth protection. So if you kind of have an idea of what's going on and you're thinking, hey, maybe I should take a look at gold, silver, platinum, palladium, maybe storing offshore outside of a country that I feel may be heading into some turmoil. We're here for you. Contact us at sales@silverbullion.com.sg and we'll see what we can do for you. Facebook, Silver Bullion SG, Twitter handle at Silver Bullion PL for private limited. Instagram, Silver Bullion SG. Audio only versions can be found on bit.ly or bit.ly/SBTV iTunes or/SBTV Spotify. And Crisis Tracker. If you do have that Telegram app, or even if you don't, go ahead and download it and search one word, Crisis Tracker. So actually, if you search t.me/Crisis Tracker, one word, this is where Vincent and I, mostly Vincent, I got to keep up with it. Vincent, he's been putting a lot of great articles out there, things that he finds as they pertain to economics, finance, gold, silver. Every now and then, a little bit of politics as well, because everything today it is political. Make no mistake, as we see these things with Russia, China, U.S., Europe. I mean, you can't avoid the geopolitics of it all. So we do post things there. Vincent, thank you for posting it there. Crisis Tracker, one word on that Telegram app. It is a free app, so go ahead and download it. We take a look at a few comments here. Um, okay, yeah, Lieutenant Colonel, how you doing, sir? Let me quickly move on. So again, hello to one and all. Um, okay, sorry. Okay, sorry. Move on here. Upcoming guest, I think you guys might like this one. It's going to be an interview with Michael Pinto, president and founder of Pento Portfolio Strategies. He has more than 30 years of professional investment experience, and he worked on the floor of the New York Stock Exchange during the mid 90s. And Michael also served as an economist for both Delta Global and Euro Pacific Capital. He was also the portfolio creator and consultant to Delta Claymore's commodity portfolios, which were distributed through Claymore Guggenheim's sales network. So, Michael Pento coming up. Make sure you hit that bell and subscribe so you'll be notified when that interview does take place. And thumbs ups are always, always appreciated. And that is one reason why we go ahead with this ebook thank you giveaway, or in this case, Amazon gift card. We're going to be offering up to a $10 gift card for our winners. And I should say, we're going to be giving them to the first five who can answer this next question coming up correctly. You got to be one of the first five in this live stream to answer it before the timer runs out. It's going to come from the Jim Rogers interview. So hope you had a chance to watch it. US winners are going to be given a link to download the gift card. Non US winners can ask Amazon to exchange the gift card if it's not usable in your country, and provide us with an email during this live stream. No other messages are needed, just your email, and we'll give you the link for that email. So, having said all that, the question, hope you had a chance to watch that Jim Rogers interview. The question is, Jim Rogers says the market has no blank. Jim Rogers says the market has no blank. Take a guess. You never know. You may get it right. And I'll go through the comments as you try and figure out this answer. Okay, so let's see what's out there. So yes, be sure to join that group, Crisis Tracker, t.me/crisis tracker. So Jim Rogers says the market has no blank. Go ahead and take a guess. Lieutenant Colonel, yes, absolutely. Pento, I tell you what, he's a straight up guy. He's a really good guy. He gives a lot to charities and things like that. So I'm looking forward to it. Always looking forward to having a chat with Michael. Okay, so let's see. Truth Monster, legs, support, weight, legs. Uh, Pablo Pina, okay. Liquidity, Matt Bittner, Foundation, Integrity, Greg Gaia, legs, legs. A lot of people saying legs. Jim Rogers says the market has no legs, bottom, no bearing on reality, legs, memories, legs, opinion, legs. Wow, why is everyone legs is not the answer? But everyone seems to be saying legs. Legs, no market value, no stability, discovery. Um, Okay, I don't see it. The timer's just about out. The answer was fear. Okay, the answer was fear. The market has no fear, according to Jim Rogers. Curious, why? How come a lot of people said legs? Just curious about that one. Anyway, Jim Rogers says the market has no fear, and just to find out that is what he said, we will revisit our interview with Jim Rogers. This is what he had to say.
But no, the market never has any fear. The market does what reality tells it to. And if things are good, markets go up. If things are bad, markets go down. If governments are doing foolish things, markets react accordingly. As you know, Patrick, many countries throughout history, their financial system has collapsed. Their money has collapsed often throughout history. When things get really bad, it just totally collapses because the market knows.
All right. Yeah, I wish we could have given one away, at least one. But well, the market never has any fear. Market has no fear, is what Jim Rogers is saying. Market does what reality tells it to. I had a bit of a tough time with that one. I do admit, because I think you folks know that my take on this. A lot of people's take on this is that when we went through 2020 and the bug and everything going on, we saw the Fed holding up the market, basically winners and losers were being chosen. Zombie companies were being kept alive. So the market does what reality tells it to. I mean, reality was saying, markets are in trouble, but Fed kept it up. So what's the reality? Is the Fed the reality of the markets? Is that where we are at this point in time? If governments do foolish things, the markets react accordingly. The market knows. So, have another question here. If things are bad, markets go down. Why did we see new market highs almost every week in an undeniably bad time? So, I'm curious to know your thoughts on this one. Let me take a look at a few comments here. Okay, tell you what, I'll move on to the next Jim Rogers clip.
We haven't had a serious bear market in the US for 13 years. That's the longest in American history. Now, maybe it'll go for 30 years. I don't know, but it's already the longest in American history. So, no, we're certainly going to have bad economic times again. In 2008 and 9, we had a big economic problem because of too much debt. Patrick, since then, the debt has skyrocketed. Look out the window. The debt has skyrocketed everywhere in the world. So, the next economic problem is going to be the worst in my lifetime because there's staggering amounts of debt, like has never happened in world history.
Absolutely. No serious bear market for 13 years. I mean, you really got to go back to 2007, 2008 when, or 2011 was when I think the first QE started coming into play. But 2007, 2008 markets had a bad time, and we'll talk a little bit about that. And debt, of course, has skyrocketed since 2008. We'll show a chart on that coming straight from the Fed. Next economic problem is going to be the worst in Jim's lifetime. I think it may be the worst in pretty much all of our lifetimes. But what are your thoughts on this? I'll be interested to see your thoughts. One more clip from Jim Rogers.
Gold is too good because the politicians don't like that much discipline. Gold and silver impose serious discipline, and politicians don't like discipline. They like to be able to spend. They change the rules, and they've always changed the rules. When you had the gold standard or the silver standard, if it got too hard on politicians, they just changed the rules.
All right. Gold is too good, not liked by politicians. I'm going to have to completely agree with that one. Gold, it works when if politicians have discipline, a gold standard can do phenomenal things. It's when politicians don't have discipline, uh, they really don't want gold. They don't want gold at all. Gold is too good. It holds them to account. And this is why politicians will always change the rules. They will always change the rules, just as Jim Rogers says. So, what are your thoughts on this? Let me look at a few comments here coming in from Vincent. Vincent, how you doing this morning? I think he was responding to Matt. Didn't QT begin when the Fed raised rates? Vincent says they sold bonds to banks for cash. Okay, all right. Thanks for chiming in there, Vincent. So I tell you what, yeah, markets. A lot of people they are going to say they're manipulated, but a lot of guys aren't willing to come out and say that. I mean, we just had JP Morgan convicted, right? I mean, how much more do you need to understand that, markets, yes, whether it's spoofing or whatever else, there are things that are going on, and you just don't see people acknowledging it the way that they should. There is absolutely manipulation going on without question. Moving forward, going to take a look at Gerald Salente's Trends Journal, his weekly message. Two articles: Americans sink deeper into debt, and mortgage payments stop. Mortgage payments actually stop in a particular country in Eastern Europe. Gerald says, with each passing day, the geopolitical and socio-economic conditions of the world rapidly deteriorate before our eyes. Each day is another chapter of hell on earth. Isn't it wonderful that Pelosi went to Taiwan and ramped up hostilities with China? Isn't it great that as America's infrastructure rots and the masses struggle from paycheck to paycheck, that Biden just sent another $5.5 billion to Ukraine to keep bloodying the killing fields? Morally, spiritually, physically, and financially, we are in the fight of our lives. But in this era of repression and censorship, to live by the principles of life, liberty, and the pursuit of happiness may warrant government prosecution. But these realities are prohibited in the mainstream media, who provide daily doses of fear. I guess I got to apologize because this one might be about fear too. Daily doses of fear, hate, hysteria, and stupidity. Who cares about Kim Kardashian or an actress that got into a car accident or who will be able to compete in the FedEx Cup playoffs. But that golf game news is the top story in Yahoo News as we go to print. Okay. Um, Moving on the economic front, we are headed toward the worst financial crisis in modern history. The only thing preventing it from collapsing is the bankster bandits that are rigging the markets, as we fully detail in this week's and previous trends journal. Okay, Americans sink deeper into debt. Chime in on this if you're seeing this. American consumers layered on another 40.1 billion in debt last month, up 10.5% year on year compared to May's addition of 23.8 billion or a 6.3% annual rate according to a new US Federal Reserve report. Revolving debt, mainly credit card balances, grew 7.8% in May and more than doubled to 16% in June year over year. Non revolving debt, such as car loans, expanded by 5.5% in May and 8.8% in June. These figures exclude, don't even count mortgage loans. In this year's second quarter, Americans borrowed 98.9 billion more than in the first 3 months, the Fed found, and the Federal Reserve Bank of New York calculated the total as slightly higher than 103 billion, the biggest quarterly jump since 2016. So Americans sinking deeper into debt. Mortgage payments stop. To ease inflation's pressures on households, Poland's government is allowing homeowners to skip mortgage payments for up to 4 months this year and another four in 2023. More than 500,000 homeowners in the country took advantage of the program within 2 days of its opening, according to the website Notes from Poland. Now, the country's central bank has raised interest rates to 6%, the highest since 2008, to rein back inflation that ran at 15.5% in June, the fastest pace in 25 years. And as a result, families with adjustable mortgage rates have seen their monthly payments rise as much as 70%. Our mortgage has become terrifying, one homeowner told the Financial Times. If all qualified homeowners halt their mortgage payments for the full 8 months, Poland's banks would lose the equivalent of 4.1 billion in cash flow over the next 18 months, the banks have calculated. Commerce Bank estimates that as many as 70% of its mortgage customers will take advantage of the suspension. Adjustable rate mortgages make up the majority of home loans in Finland, Portugal, and Romania, as well as Poland, and more than 20% in Spain and Sweden. Now, while Poland's homeowners are breathing a sigh of relief, banks, they're not happy. They're howling in protest. Polish bankers say that suspending mortgage payments for 8 of the next 12 or 24 months will erase their profits for the period. And they allege that government officials have granted the payment holiday to boost their chances of being re-elected next year. As if suspending mortgage payments was not hard enough on banks, Poland's governing Law and Justice political party has suggested a windfall tax on banks that fail to pay higher interest on deposits. Banks banks have become one of government's favorite targets as inflation ravages people's finances. There you go, Poland. I mean, 8 months. You can take the last 4 months of this year, the first 4 months of next year, and have pretty much an 8 month holiday on paying your mortgage. So, Poland legislators going after bankers or pandering for votes, you decide. All right, let's quickly check out our weekly inflation treasury yield check. So, again, CPI is the consumer price index. It's the red line. The yield curve below shows the duration and interest rate of bonds. Key points about this chart: an incline and to the right, expectations are good. Flat, expectations are waning. And if it inverts, things are not looking good. You're looking at a recession. So here we go. January, March, you still have that incline, but you can see the middle and left hand side of that curve going up. April is pushing up in the middle, starting to flatten out. May is pushing up in the middle, starting to flatten out again. And you're going to see the left hand side really start to push up. So June, July numbers just came out. CPI back at 8.5%. August, and this is the most current. This was as of Friday. Now, interesting points to look at here. You look at the 20-year 3.34, and it was actually the other week where you had the 1 year was actually higher, and the 2 year was actually higher than the 20 year. But make no mistake, you can see that it is inverting. So this is just a graphical representation representation of what is going on whenever people say yield curve. All right. So let me head on over to the website. Before I do that, let me see what's going on with the comments here. Let's see. Hang on here. Um, yeah, Seymour Rivers. Yes, gold won't rust, and mice won't destroy it. Absolutely, absolutely. Thumbs up on that one. What else is out here? Credit cards used for gas. Wow. Okay. Credit cards are the consumer's printing machine. Okay. Um, all right. A lot of strong comments here. Okay, let me move on quickly to the website here, silverbullion.com.sg. This is our website. We are part of silverbullion.com.sg. We do have some specials going on. We Let me see if I can get back to this first. Okay, here we go. 1 ounce maples, $4 over spot. That's a pretty good deal. 5 gram credit Swiss minted bars, only 6% over spot. For a 5 gram, that's pretty good. So a couple specials going on out there. And yes, that 15,000 ton capacity silver vault is still renovating. I should say the building is renovating, but all the gold and silver in there is nice and snug and very, very secure. It's really a sight to see. If you're in Singapore, I hope one day you can stop by. Gold silver ratio 86.2. What that means is it takes 86 ounces of silver to equal 1 ounce of gold by price. By price. Miners are saying it's coming out of the ground at 8 to 1, 9 to 1. Historically, they tell us it should be 16 to 1. Either way, silver is definitely undervalued to gold when you look at this chart. And anytime it's over 80, you may want to consider switching to getting silver. So 86.2, it is definitely a time for silver. None of this is financial advice. It's just what we've seen over time and just expressing it to you. Featured products. These are some of the featured products you can buy online. You can store with us. You can walk into our shop in the Millennial Walk here in Singapore and go ahead and pick any of these things up. You do own it once you buy it. As an example, 1,000 ounce LBMA bars, excuse me, you can pick them up from the shop. There are 2 bars. Bring a trolley. This is heavy, serious silver here. And you can store in the vault. We have 317 bars waiting for you in the vault. You can go ahead and buy it, and you do own it. If that's the case, you want to store in the vault, you need to have an account with us. Sign up as a Silver Bullion user. There are 6 types of an account. Personal is the easiest one. If it's just you, joint can be a joint account, you and your spouse or your significant other. Trust accounts. I know many of you have trust accounts out there. Joint account with a minor, something you can get going with your children. Business account and retirement account. One of the myths with retirement accounts is that it has to be stored in the US. It does not. It does not have to be stored in the US. You can take advantage and store it here in Singapore, your precious metals IRA account, and have another layer of protection. A lot of people fear that uh, the IRAs, precious metals IRAs, or silver gold may be confiscated in the US. This is another layer of security if it's offshore, and it is okay to do so. Nonetheless, a personal account, uh, very simple. All we need is basic information, an ID, passport, for an example, and you just need to fill out our online application, and that's it. We'll just do a few checks, make sure everything is all good, and you're good to go. You can store offshore. It's as simple as that. And as always, please do make sure that as a reference, you go ahead and put SBTV. Okay, SBTV. That will help us out a lot. So if you have any questions, you want options. If you really want options, you want your silver and gold to do the most that it can for you, go ahead and contact us, sales at silverbullion.com.sg. And precious metals IRA, yes, it can be stored offshore here in Singapore, perhaps another layer of protection for you. Moving on to Twitter, few things that I went ahead and bookmarked. Zimbabwe. Zimbabwe hails gold coin success and wants to issue more. So Zimbabwe getting back to being real, getting back to gold. They're using it and they're finding out that it's working. It's really starting to work. All right. What else is out there? Why gold does not need to pay interest. This is a short clip that Gregor did, and I'll see if I can just go ahead and play this for you here. It's not that long. It's a pretty short clip.
Hi, I'm Gregor Gregerson from Silver Bullion. Sometimes customers ask us why should they buy gold and silver when it doesn't pay any interest. And to illustrate this point, what we have here is a typical 1 kilo gold bar. And this kind of bar was worth about $15,000 back in the year 2000. Now, if you would have taken this money and you put it in your average savings account in a bank, after 22 years, you would have had $600 worth of interest. On the other hand, if you would have bought and kept this bar after 22 years, you would have had $60,000 in return. So that's essentially why gold does not need to pay an interest, and it tends to appreciate over time in a very reliable manner.
All right, so Gregor making another case for gold. Most of us know gold is where you want to be, silver is where you want to be. It is the true money. Spoofing the market. Get algos to react going forward, and there will be no humans to spoof. Algos will. Who then gets prosecuted? A machine. No market will be safe. There will be no markets going forward. What do you think? And this was coming out on the heels of that JP Morgan conviction for spoofing, the lesser charge. They did not get the racketeering conviction, just the spoofing, as far as I understand. So, I mean, that's really the question, because the algos basically control the markets. Who then gets prosecuted once the algos and machines fully take over? Well, we'll have to see what happens, because I don't think these spoofing and manipulations of markets will stop. China preparing for sanctions. This is coming off a report that state-owned firms delist, Chinese state-owned firms delist from the U.S. Uh, Speculation is that, if there is going to be sanctions, then these companies are already out, and these companies, they are actually in global markets anyway. So they are. There's no chance of the U.S. reaching around and going after the other companies to make the sanctions stick, or the other exchanges or markets to make it stick. So China is again getting a step or two or three ahead of what may be coming down. The net Zhang, security is the key issue during this currency regime shift. We're going to talk about this. Okay, so she talked about it on her Beyond Gold and Silver channel. What this is this guy was traveling, and he's never seen a Friday without traffic while entering Mexico from the US. This is today's reality due to yesterday's cartel violence. This is back on August 12th, I suppose. um, Tijuana is experiencing similar violence. So, this is one of the things. If you are in a place where you do expect chaos to be on the way, you may want to be looking at things like storing some offshore outside of your borders, or looking at things like cash gold. These are cash gold token is something that can it is fully backed, absolutely fully backed, and it's something where if you move, let's say from US to Europe, you can redeem or get your gold in Europe. If you move from US and have a cup of coffee with me here in Singapore, you can redeem your gold in Singapore. And likewise, if you're in Singapore and you go to the US, you can redeem your gold in the US. So you don't have to worry about having it cross international borders. Keith Weiner, and this is pretty interesting. I mean, it's a simple thought, but a lot of times, Bitcoiners or other people, they will say gold is too hard to tell counterfeits. But with the case of Bitcoiners, uh, don't buy Bitcoin, buy a mining rig, set it up in a data center, configure Linux, configure Bitcoining, miming or mining software, and mine Bitcoin. So what Keith is trying to say, of course, is much more complicated to go through all of that than to simply put a magnet to a gold coin, put it on a tester, put it on a scale. So Keith has a point there. This one, guys, if you can, let me know. If you're living in the US, have you noticed the people around you all of a sudden getting more and more desperate? Can you smell the desperation in the air? Uh, what are your thoughts on this? What are your experiences? Are you seeing these things? Uh, yeah, cash money. If you can, there was a pretty good conversation with Keith Weiner. So go ahead and give it a look. Yeah, ex JP Morgan, they were cleared of racketeering. They only have the spoofing charge. Judy Shelton, thinking about this again a year later, restoring monetary integrity is key to preserving the morality of capitalism and constitutional principles of individual liberty, equal justice, private property, and rule of law. So she makes a good point there. Third Ferguson, Craig Hemke, TF Metals. He's he has his own view of what's happening with the traders preparing for the comics open. And let me just take a look at a few more things here real quick. This one interesting. Deadline August 15 coming up. In fact, yes, coming up. Chinese commercial banks say bye-bye to paper precious metals trading after the new account opening of paper precious metals banning. Commercial banks will close the door to buying paper precious metals on August 15th. China Merchants Banks ask customers to clear their positions, which I'm assuming is going to be their paper positions, before October 17th. So again, China making a move, and this is for physical. This is going to promote physical metals for sure. So let me get back to you guys. I'll wrap that up with Twitter. Let me take a look at a few comments. Comments in the word there. Comments here. Um, all right, let's see what we have here. Um, let's see. Uh, you guys are good. You guys are good. Let me see the questions out here. Let's see. Yeah, Richard. Let me add this one in. Richard Martin, how much does it? How you doing, Aloha? How much does it cost to store with us in Singapore? I tell you what, you may be surprised. Hang on here. Let me pull this up. Um, yeah, let me come back here. I'll pull this up. Silver. We're only talking. Hang on here. 20 cents. Okay, 20 cents US. 20 cents per ounce per year. Okay, 20 cents per ounce per year. That's it for silver. Gold is about $7.18 per ounce per year, and that's it. So you calculate how much silver you wanna store, 20 cents an ounce. Calculate how much gold you want to store, $7.18 per ounce. And the thing is, we don't charge according to spot rates. And this is the key difference with us and almost everyone else. Whatever the spot price is, it doesn't matter. What matters is the amount or the weight of silver or gold you are storing. So in this case, with a lot of other companies, if the spot price goes up, which we all expect it to do, you're going to pay more. You are going to pay more for your storage because it's based on the percentage of the spot price. With us, it's the weight. So even if spot goes up, which you do expect it to do, your storage fees are not going to go up. And this is a big advantage that we do have, or one key difference. So again, that's a great question. Thank you for that, Richard. So I'll move on. Let's see here. We are going to move on to the topic of the day, and that one is five charts, or four plus one, because one is an overlay. Charts from the Fed that are telling us a story that we need to know. Let's get this straight now. I'm not claiming to be an expert on anything I'm about to show you. However, I do think that together with all of you, we should take a look at these four plus one Fed charts. We're going to look at the Fed balance sheet, the Fed funds rate, which we can call the interest rate, the M2 money supply, the 10-year minus 2-year. And this is perhaps the key one, the 10-year minus 2-year, because those are the benchmarks. A lot of investment decisions are based on how the 10 and the 2-year are doing. And then what we're going to do is we're going to overlay the interest rate over that 10 and the 10 minus 2. And you guys are going to see something pretty interesting. All right. So let's move forward here, and we'll get going with the first chart. I mean, I know there's more, but we'll start with these and try to understand what these charts are telling us. historically and perhaps what they are telling us down the road. So, Vincent, I know you're there, so chime in. Feel free to chime in. Anyone, feel free to chime in. Okay, so here we go. Let me get to the first chart. This is what they call the excuse me. This is what they call the balance sheet. Okay, the Fed balance sheet. Total assets less eliminations from consolidation. Wednesday level. This is basically the balance sheet. If anyone says the Fed balance sheet, this is what they are looking at. So key points in here, these gray vertical bars. You can see one here. This is the recession not that long ago, back in 2008. And another one here. This was the bug pandemic. It's a little bit thinner, but nonetheless, a recession line was there. So let me with this chart, those two things are the obvious things. Okay, and you can see in the first one here, basically, the balance sheet went up $1 trillion. It moved from 1 trillion to over two during that recession. Okay, and it never really stopped. It kept going. This is when we had our QE levels as well. It kept going, kept going, went up another 4.5 trillion, came down. They tried tapering, didn't work, had that taper tantrum, and then we got a kick up again. This is during the bug. And this is pretty incredible here how it had gone straight up, continued to go up, and at this tail end here, this is where they are trying to taper again. This is where you're seeing the reverse repos and things like that. They're trying to reduce that balance sheet. Okay, so again, you can it went up from really 1 trillion in 2008, where we are now at almost 9 trillion. Okay, so it went up. They went up a lot. The Fed was really into the market, supporting zombie companies, buying bonds, buying all the bonds. They were buying everything. So this is what was happening. This is where we are today. The question here is, will we see the Fed reverse course this year? Are we going to see them reverse course this year, going back to loose money policy where we topped the 10 trillion mark? Are we going to see that this year? What do you think? What do you think there? I mean, a lot of people are saying Fed's going to have to pivot. If they pivot, people think they're going to go back to some form of QE. They're going to be buying up assets again. So, what do you think about that 10 trillion mark? Are we going to see it this year, next year? Maybe not see it at all. Well, what do you think is going to go on with the Fed balance sheet? Continue to rise? What do you think? Go ahead and let me know. Another one we're going to take a look at is the Fed funds rate. So this is the interest rate. Okay. Uh, this is when Powell comes on the FOMC meeting and he has things to say. This is when we hear the Fed has raised or lowered the interest rate. This is what they're talking about. They are talking about this chart. So notice again the gray bars going up and down. These are times we went through recessions. Okay. And when you look at the vertical gray bars signifying a recession, what stands out? What stands out when you see this? So gray bar, effective fund rates go down. Another gray bar, a recession, the rates go down. Another recession, here the rates go down. So you look at all the gray bars, you can see how the rates will go down. Gray bar recession, the rates will go down. Another recession, the rates will go down, and we were at basically zero for a very, very long time. Another recession here, and the rates went down. And you look at this tail end. This is the key part. This tail end, the Fed is raising rates, but they have not called a recession yet. So you see no gray bar. They're raising rates, but I tell you what, in time, I think we all will see a gray bar that is going to show up. Again, this is the Fed lowers rates in these recessions to stimulate growth, borrowing, stimulate the economy. But right now, they are not doing that. There's no gray bar. But we'll see in time. There should be a gray bar. So go ahead and leave a comment on what you see there. So the Fed balance sheet growing, the Fed funds rate, it should be going down. A lot of people say we are in a recession already. It should be going down, but it's going up. They are raising rates in a recession. All right, the next one. is the M2 money supply. Okay, basically, hang on, let me get this center for you. Okay, so the money supply, points to notice. You look at how flat the money supply was until about 1970. Okay, it was flat. Why? Why do you guys think it was flat until 1970 or around there? I know you folks know the answer. And then you look at 1980. Remember this time it was when Volcker raised interest rates to some 20%. And notice at that time the money supply was at about 1.5 trillion. Okay, it's about 1.5 trillion. Hang on, somewhere on here. There you go, 1.5 trillion. Now, how high will the interest rate have to go in a time of high inflation with the money supply 15 times larger? And what I mean is, when Volcker experienced the high inflation, okay, he raised the interest rates, and at that time, our money supply was only 1.5 trillion. Here we are today. Here we are today. How high will he have to, or someone have to raise interest rates considering the money supply today? I remember back here, it was 20%. How high do you think they'll have to raise interest rates today to start to quell that money supply, to start to bring it back down? And this is key also because a lot of people say, an ingredient to inflation is an over excess of money. So the Fed is desperately trying to burn money, get it out of the system, take it out of your hands, not let you, spend too much. They're trying to cool it off because again, what they know is Volcker, he had to raise it some 20%. There's no way they can raise it 20%. There's perhaps no way they can raise the interest rate to 10%, maybe even 8%, 5%. There's just no way. There's going to be too much pain if that should happen. All right. And in fact, I want to show you something that Volcker did say. Sorry about this. Volcker's announcement of anti-inflation measures. This is pretty interesting. So in October of 79, Fed Chairman Paul Volcker announced new measures by the Federal Open Market Committee aimed at reining in the inflation that had afflicted the US economy for several years. In 79, President Jimmy Carter nominated, Fed Chairman William Miller as Treasury Secretary. This is also interesting. The Fed chairman was William Miller, and then Jimmy Carter brought him in as Treasury Secretary. Well, we had Janet Yellen, who was the Fed chairwoman, and now she's brought in as the Treasury Secretary. The two times they did this are the times when we are seeing the highest inflation levels. Coincidence? I don't know. You tell me. Anyway, Carter brought him in as Treasury Secretary as a part of a larger cabinet shakeup. Miller, a former business executive who had served a little more than a year at the Fed, oversaw a period of slow growth and high inflation, more popularly known as stagflation. In a move that signaled the growing discontent with inflation, Carter nominated Fed President Volcker to take Miller's place as Federal Reserve System chairman. So again, remember, the chairman was Miller. Volcker was just a president. So a lot of people think Volcker was the head of the Fed. He was just a president of one of the Federal Reserve banks. So anyway, nonetheless, um, since the 60s, the nation had experienced a trend of rising prices as inflation began creeping upward from annual rates that were previously less than 2% for several years. Sounds like where we were. In 73, the Federal Reserve tightened policy to address increase in inflation rates. However, in the face of higher unemployment, the Fed eased its policy before inflation had been fully contained. Sounds almost like the taper tantrum. And the year over year inflation rate bottomed out at 5% in December 76 before moving higher once again. In 79, inflation was threatening to rise further as prices jumped 7.7% from the year before, according to Personal Consumption Expenditure Index. And at the same time, there was concern about the US dollar, which had lost 12% of its value against major foreign currencies. Um, so let me get into the nitty gritty here. During Volcker's confirmation hearing in 79 before the Senate Banking Committee, the soon to be Fed chairman made his intentions clear. By then, inflation was running at an annual pace of about 9%. We just were at 9.1. We went down to 8.5. So the same story. Volcker pledged to make fighting inflation his top priority, telling lawmakers the Fed would have to call the shots as we see them. In response to questions about his views On the money supply, Volcker responded, the supply had been rising at a pretty good clip. Sound familiar? We just saw that money supply, and Volcker was saying back then the money supply had been rising at a pretty good clip, and there was no evidence the nation was suffering grievously from a shortage of money. So back then, during the pandemic, it wasn't necessarily a shortage of money. It was the Fed trying to keep businesses afloat because businesses weren't really doing well. Things were shut down, and so a lot of this money was created, given out, supporting zombie companies, picking, choosing winners and losers. But as Volcker said, he saw money rising at a pretty good clip, but there was no evidence that the country was suffering from a shortage of money, and this is what we kind of saw again. So let me move on here. Um, thing is, as we say, there's nothing new under the sun. Volcker saw this, and key points there. Volcker said the money supply had been rising at a pretty good clip, and that's what happened in 2020. So again, we're seeing these same things over and over. Carter brings in a former Fed chairman, makes him Secretary of the Treasury. Inflation ran like it never ran before. And here we have Biden brings in former Fed Chairman Yellen, makes her Treasury of the Secretary, and we're seeing inflation again running at a pretty good clip. So I don't know. Again, you tell me, coincidence or what. So let me take a look at a few comments before we go on. Yeah, let me get back to Richard Martin's question. Our rates are fixed nominally, not a percentage of the value, so storage fees don't increase in tandem with rising gold and silver prices. So again, that is one of the key differences. Um, all right, let me take a look at these comments here. Niels, Han Dynasty, yes, buy as much as you can. Definitely buy as much as you can. I've been buying again. Lieutenant Colonel, great point. Platinum is very, very much undervalued, and we were kind of talking about this when it comes to the BRICS countries, Russia and South Africa. They are heavy in platinum. They have platinum resources. If they should ever move towards platinum, I think there's a good chance platinum may have a good hit, a good bump again. But there was a time platinum was more than gold. Now it's a little bit more than half the price of gold. So platinum, I mean that's a great point. Again, not financial advice. Just letting you know, just letting you know what's out there. What else is out there? Let's see. Um, hang on, guys. Uh, okay. Let me move down. Take a look at the. Okay, I guess the comments here are going okay. Let me move on. Let me move on. Excuse me to the Let me just move on here. So I'll look at the next chart, which is going to be the 10 year 10 year minus the 2 year, and this is where it starts to get interesting. Now, what this is here, let me expand it. What this is here is 10 year, so the 10 year yield minus the 2 year yield. Okay, so basically it's saying five minus two is three, or 5 minus 10 is -5. That's basically what it's saying. So anything below this black line here is a negative. And that means that the 2 year is giving more yield than the 10 year. This is the inverted, okay? The inverted part of an inverted curve, perhaps this is where the 2 and the 10, or the 10 and the 2 invert, I should say. So you can see here when it does invert, um, these are when recessions happen, or they predicated recessions. You can see it here, an inversion, and there's your gray bar. An inversion here, and there's your gray bar here. Okay, another inversion here, and there's your gray bar here. Another inversion here, another gray bar here. Again, gray bars mean recessions. Okay, so it predicated recessions, and this is why people watch the 10 and the 2, because it's almost a done deal. Whenever they invert, there's going to be a recession. Okay, inversion, recession. Inversion, well, no recession. There wasn't a small inversion here, and then there was that recession again back in 2020. So here again, you have that inversion, there's no recession. So this is the one of the first times in 20, 30, 40 years There doesn't seem to be a recession. Perhaps it's only because they've never called a recession yet. But again, these are telling us something here, right? It's definitely telling you something. Inversion, recession, inversion, recession, inversion, recession, inversion, recession. And it keeps going the same way on and on and on. Now I'm going to do something here. What I want to do is I'm going to add on the effective federal funds rate or the interest rate. Okay, so I'm going to bring this chart up. I'm going to add it. Okay. So now when you take a look at this, and what I'll do is I'll squeeze it down so we can see where it begins. Okay, so we can squeeze it down here. So again, when it inverts, a recession is there, and then we see the red line starts to go down. In fact, what I'm going to do is I'll bring up let me bring it up here. I'll show you it on a different chart. Okay, so this is a little bit easier to see. So when it goes down here, inversion, recession, recession, drop interest rates. Inversion, recession being the gray bar, drop interest rates. Inversion, recession follows, drop interest rate. Another one, inversion here. Okay, here's your inversion. Fed will drop interest rates again. So we can see that this is pretty consistent. Inversion here, recession, drop interest rates. Uh, Almost an inversion, but we can't count it as an inversion. But the Fed did drop interest rates. But this is the key. Again, this is the key point that I want you to take a look at. The Fed is raising rates. This tail end here, they are raising rates at a time when we have this inversion going on. And you can go across this chart. It's never really happened before where the Fed raised rates in a recession as the yield curve or the 10 and the 2 were inverted. So this is pretty significant. The Fed is doing something that's never really happened before, never really done before. So again, every time a recession, inversion, recession, interest rates come down. Inversion, recession, interest rates go down. Inversion, recession, interest rates go down. But this time, no, we have the inversion. Interest rates are going up. So they're again raising rates in a recession, raising rates at a time when the 10 and the 2 are inverted. They're doing something never done. For that reason, we need to go back and look at some things. The most recent recession predicated by a 10 and a 2 year inversion. So we went back over, or we touched on the 80s with Volcker. Let's look at the 1990s recession, 1998 to 2000, and then the dot-com bubble. For the 2007 crisis, we all pretty much know what happened there. So let's take a look at the causes for the 1990s dot-com bubble. So what I'll do is I'll move on to here, 1990s. Okay, so this is from the Insider, Business Insider, I believe. 1990s recession is a cautionary tale for today's economy. And this came out on April 27th of 2022, so very, very recent. Trends in the current recovery are eerily similar to those that sparked the recession of the early 1990s. Sour economic sentiments, high oil prices, and an inflation fighting Fed all fueled that downturn. A recession is not given, but the slump of the early 90s gives hints as to how such a decline could start. So, with recession fears spreading across the US, economists are looking to previous downturns for clues as to how the economy will fare in the months ahead. And many have looked at the Great Recession, citing how the housing market is the hottest it's been since the mid 2000s bubble that sparked the financial crisis. Others argue that the next downturn will mirror the 70s when slow economic growth and sky high inflation pushed the US into a period of crippling stagflation. And we're hearing this word more and more, stagflation. Now, a deeper dive into current trends and the 1993 paper from the Federal Reserve suggests a near term downturn will most closely resemble the recession of the early 90s. Now, many of the factors that caused the downturn have emerged in recent months, particularly in the wake of the invasion. Now, after the unusual bubble fueled recession of the early 2000s and the bug, the US could soon slide into its first traditional downturn in 3 decades. And that 93 paper published by the San Francisco Fed lays out several causes for the 1990s recession. They include pessimistic consumers. We have that. Elevated oil prices. We have that. Linked to the invasion at that time. We have an invasion again as well. And attempts by the Federal Reserve to lower the rate of inflation. We have that as well. If that sounds familiar, it should. The economy is currently dealing with these very same trends. And if the 1990 downturn is precedent, the US could be in for an extremely similar session. Okay. And it's not just this article, there was another one. Um, this is talking about the dot-com bubble, which you saw late 90s, early 2000s. Now, the dot-com bubble was a rapid rise in US technology stock equity valuations. Have we seen this? Have we seen this during the bug where the Fed jumped in, pushed up valuations on everything, and we saw the tech market take off. Everybody was at home doing Zoom and things like that. So it took off. A rapid rise in US technology stock equity valuations, fueled by investment in internet based companies during the bull market in the late 90s. Now, the value of equity markets grew exponentially during this period, with the technology dominated NASDAQ index rising from under 1,000 to more than 5,000 between 95, the years 95 and the year 2000. But things started to change in 2000, and the bubble burst between 21 2002 with equities entering a bear market. Now, that crash followed the NASDAQ index, which rose fivefold. We're seeing these things again in 1995 and 2000 tumble from a peak. Let me just get through to this part. The key takeaways here: dot-com bubble was a rapid rise in US technology stock equities. The value of equities markets grew exponentially during the dot-com bubble. We're seeing these things again. um, okay, so basically what we saw was tech come in. We saw this bubble. And let me just get to, I think there was one more part I wanted to show you here. Hang on, let me just see. Okay, how did it burst? The 1990s was the period of great expansion and capital growth the country ever saw. Although high-tech standard bearers such as Cisco, Oracle were driving organic growth in the technology sector, it was upstart.com companies that fueled the stock market surge that began in 1995. And I guess you can relate this to when we saw that SPACs craze, right? SPACs came in, and people, all kinds of people were throwing money at the SPACs, again, in combination with the Fed holding up the markets. And the bubble that formed at that time over the next 5 years was fed by cheap money, easy capital, market overconfidence, and pure speculation. All right. So we are seeing absolutely these same things again, every way, any way you want to slice it. We're seeing these same things happening all over again, no matter which way you want to slice it. A recession, stagflation, and thinking of the dot-com bubble, are we in any bubble that may cause markets to follow suit? Too deep, very deep corrections, maybe even a market crash? Lots of people, lots of people say yes. So let me ask you, what bubble are we in? Do you think we are in a bubble? I mean, go back to these five Fed charts. The balance sheet, astronomical right now. And if they pivot, that balance sheet is easily going to go over 10 trillion and beyond. Money supply, we saw what happened when the bug came about. It just took off. We also saw what happened when gold was backing the US dollar in the 70s. That M2, that money supply wasn't going anywhere. It was hanging tight. It was growing as the economy grew. So again, once gold was taken out of the picture, things really start to they took off. Okay, and then we saw the 10 and the 2 year. Whenever these invert, and I showed you the chart earlier, they are definitely inverting. It's a time that signals a recession is on the way. A lot of people think that recession is here already, but The Fed uh, government is just not calling it. I mean, up and down, any way you want to slice it, when these charts add up, they are telling you something that our governments and central banks are not. Okay, keep that in mind. Keep that in mind. So, what bubble are we in? Let me go ahead and take a look at the comments here. Let me scroll down. Let's see. Uh, yeah, debt bubble is the most frightening. Uh, Swampflation. Yeah, definitely swampflation. Okay. Well, what bubble are we in? I'll tell you what. A lot of people will tell you we're in the everything bubble. I know it's not a new phrase for you folks. You've heard this before. If you absolutely understand what's going on, you know we are in that everything bubble. We've been told this time and time again. We are in the everything bubble. The Fed's own charts are showing us the past to tell us the future. And perhaps this is why Jim Rogers says the next crash will be the worst in his lifetime and yours and mine as well. So that's going to wrap up the topic of the day. I just wanted to briefly touch over these five charts, um, maybe get us to understand it a bit, get it to show us that a picture that it's painting and the reality of where we are today. I didn't want to go too in depth with it. Just something that we hopefully we all could grasp. The information's out there, and it's coming straight from the Fed. They're not even trying to hide it. They're not even trying to deny it. Uh, Seems like that's the government's jobs today, but they're not even trying to hide it. It's there for you to see. So anyway, that's going to wrap up the topic of the day, and I'll head over to commentary. But first, I just want to touch base with you folks again. Um, I mean, what do you folks think? That money supply, empty supply is pretty interesting because again, when we were on a gold standard, it was it was growing, but at a nice, steady, reasonable amount. And once that gold standard went off, it took off. And when we had 2008, 2009, it took off. When we had 2020, it took off. They're trying to bring it back down, but we saw what happened the last few times they tried to taper and bring things back down. Couldn't do it. Took off. Wheels fell off. So again, um, when you look at things today, raising rates during the time when the 10 and the 2 year inverted, during the time of it is a recession, technically a recession, they've never done this. The Fed has never done this before. Uh, I they've never done it. So in that case, you would have to expect things that have never happened in history before because they are doing something they've never before done in history. So we'll see. You just need to really understand where we are and do the things you need to do to protect yourself. Let me just look at a few comments here. Um, let's see. Uh, Bubble doesn't need to pop. Um, that's a good question. If it doesn't pop, I mean, let's just say we have other countries that are moving away from the dollar. Uh, it could just deflate rapidly, not even pop, but just a free fall. Going down. Not like an instant pop where everything falls, like within a couple weeks or something, but it could fall, prolonged, a decline over 1 month, 2 months, 3 months, and just never ending slippery slope. Maybe it could be that way. So okay, maybe it doesn't need to pop. It could just deflate until there's no more air. So that's a good point. That's a good point. Joseph S. Yes, print to infinity and beyond. Absolutely, we are seeing this. Um, yeah, Seymour Rivers, you're welcome. I tried to make it clear from the start. I'm not going to try and give an expert analysis on this thing. I want it to be more of something that we all could understand, easily go back to, find once again, and understand when someone's talking about the Fed balance sheet, what they're talking about. When someone's talking about a 10 and a 2 year, what they're talking about. When someone's talking about the money supply, what they're talking about. So I think these are things, once we understand it and we can picture it in our minds, we understand it better, and we can see that these guys are doing something that they've never done before, um, and it's it's going to be pain. There may be quite a bit of pain. Um, let's see what else is out there. Um, yeah, okay, yeah, absolutely. I think Vincent said this best, which is why we got to drag you on here one day, Vincent. Markets take the escalator on the way up and the elevator on the way down. If you're in silver and gold, you absolutely understand this. It's we see waterfalls a lot of times, but it is true. Nothing goes up in a straight line. Markets they take the escalator up, but when they go down, they can really, really go down. So great point. Thanks for bringing that one up, Vincent. Um, okay, so let me yeah, the poor are chasing the poor are chasing waterfalls. No, no. Let me move on here to the commentary portion. Okay, so how the Fed cannot be truthful and say a recession is here or coming, I don't know. I don't know how they cannot be truthful about this. Compound that. How the US government cannot say a recession is here or coming, and yet worse, try to change the definition of a recession shows how disingenuous politicians and central banks are. And I'm going to include even the media. Politicians, central banks, media, not exactly being genuine with any of us anymore and not even trying to hide it. And I want to go back to 2007. Remember that time? We were told that a global financial meltdown would have happened in 2 days. I remember this. They said it would have happened in 2 days if the government and banks did not step in. Now, maybe they were coming out full of pride, pumping their chest, trying to tell you how we saved the world. We saved the world. What I heard was things would have went bad in 2 days. I heard that part. In other words, if their plan failed, they were not going to tell us anything, and it's happening again. You look at what's going on, they are not telling us anything. They're trying to cover it up, trying to bury it. But you go back to 2007, these guys came out pumping their chest. We saved the world. We were 2 days away, guys, but we saved the world. No, no, you weren't telling us. That's really what it was. They weren't telling us what was going on and tried to come out as being a sort of a savior. But it's happening again. They would have told us nothing, and they're doing it again. They are not going to tell you anything, and that all of us here can plainly see it, what's really going on. A recession, stagflation, or whatever, the worst in our lifetime will be, is on the way. It's on the way. Get yourself some silver, as Jim Rogers said. Get yourself some silver, get yourself some gold. Weather the worst storm in our lifetime and tell everyone you know the things the governments and central banks or even the media will not. They just aren't telling us. That's going to wrap up the commentary part. Let me spend some time with you folks and see the comments out here. Um, yeah, the inversion chart. Okay, where can I find the inversion chart? I would like to see how long it takes usually from an inversion to recession. Well, I can tell you that part. Um, even from the Fed, when we spoke to Daniel DiMartino Booth, I mean, a lot of people say it takes anywhere from 6 months to a year and a half. They call that the runway. So if you ever hear people using the term runway, that's a 6 months to a year and a half time when the inversion took place, signaling an oncoming recession to where the recession actually hit. So that when you hear runway, that's what they're talking about. Anywhere from 6 months to about a year, year and a half. For the chart, you can just hang on. Let me see if I can put the link in here. Last time I tried it, it didn't work out. Let me see. Let me scroll back and find that link. The 10 year and the 2 year. Hang on. All right. Let me see if I can add that in. Uh, okay. Yeah, there you go. Fred.stlouisfed.org and then /series/T10Y2Y. That's where you're going to find the 10 and the 2 year. So go ahead and just copy that link if you want in the comments. Let me see what else is out there. Um, let's see what else is out there. Yeah, see more real. Okay, great. I've already recovered the premium plus profit on my platinum purchase last month. Yeah, I mean, platinum. I'm a silver guy all the way. I get gold when I can because I know you should also have some gold. And with platinum, you know, I think we all saw it when it was above gold. It came down, and I don't know why. I personally have not pulled the trigger on platinum, but I think I'm going to have to pull the trigger on platinum simply because there seems to be a lot more headroom for platinum, considering it was once more than gold, considering the BRICS, where Russia and South Africa, they do have quite a lot of platinum there. And if they do, have more and more influence in the world, we may see platinum have more influence in the world. So again, not advice, but just to say, keep an eye on platinum as well. So great point, Seymour. Appreciate that. What else is out there? Um, yeah, buy silver, buy silver and platinum, for sure. Um, so again, I hope the charts help you out. We'll be wrapping up the program. I thank you all for being here. Notice there were a few hundred of you, a couple hundred of you, so I appreciate that. Again, shoot us an email, sales@silverbullion.com.sg if you have concerns about what's going on. If you want to see what we can offer you, the jurisdiction of Singapore and why a lot of people choose to store offshore. And if you have concern about, getting your metals back, there are things like cash gold. You can store cash. You can buy cash gold tokens. 1 gram of gold is fully backed. I mean, one cash token is fully backed by 1 gram of gold. It's fully backed. I know it's there. I see it all the time. I know it's there. Uh, so again, if you have concerns, things especially like cash gold can really help you out. Things like your IRA, it is possible to keep it offshore, and a lot of people have concerns, maybe confiscated, so they have concerns about going into to precious metals, but you can also keep them offshore. We are a place that you can also store your precious metals IRA, and a lot of people don't understand that, or they didn't know about it. Um, you can actually store it offshore. We have a number of people keeping their precious metals IRAs with us. So shoot us a question about that as well if you have any questions, or let us know what's on your mind. We're all in this together, as I say. Some of us, in this storm, some of you got yachts, some of you, like me, have a canoe, but we're in it together. We'll get out of this together, and we need to find people more than ever right now who are like-minded, because we just don't get the information we need in the mainstream. So again, contact us. We'll have a chat with you. So again, having said all that, as always, be a blessing, not a burden. We got a lot to do. We have a lot to do, for our families and friends, a lot to do out there. Be a blessing, not a burden. And as we always say, saddle up for what's coming ahead and silver up as well. I will see you guys next week. Take care. And for you guys back home in Hawaii, aloha. Take care.